This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Right, let's just go through and have a look at an example. I haven't put huge amounts of examples in because I just think you just need to practice the questions, and that will go through there and show you how to calculate the ratios. Okay. The way that Section C questions tend to work is that you get 1 mark for calculating this year's ratio and then last year's ratio, so effectively half a mark each. And if you can work out maybe 6 of those ratios that are required, it should be 6 easy marks. Alternatively, you might have to work out a ratio within, say, Section A, part of a multiple choice question, but I just don't think that that's likely to happen too much, given that in Section C you know that you're going to get a question on the analysis and the interpretation. So here, what you've got is a question that goes through and asks you to work out this company's return on capital employed. So remember, your return on capital employed takes your profit before interest and tax and divides it by your capital employed, your equity plus your debt. So do just be careful here, because we need to take the correct profit figure, which is the 10,200. Okay, profit before interest and tax, your operating profit. And then you need to look at the capital employed. So that's your equity. So share capital is part of equity, reserves are part of equity, your loan liability, that is debt. So your 42500 is effectively your capital employed. So to work out your return on capital employed, it's the 10,200 divided by 42,500, which works out as 0.24. If you then multiply by 100%, that will give you, is it 24%, and therefore that's answer C. Okay. It's as simple as that, but you could go through there and easily make mistakes upon it. Okay, I'm sure that if you use the wrong figure, you would get some of the other answers. Let's just have a look. Okay, so yeah, if you were to go through, and don't do this because this is wrong, if you were to go through and take the correct profit figure, so 10,200, and divide it just by, say, your reserves, you get 28.6%, which is the 29%, and is that the answer B? Again, I'm sure if you then went through and maybe used your profit after tax figure, that will go through there and give you maybe A or D, depending upon what you use with regard to your capital employed. So you've really got to be careful that you don't use your profit after tax, or your profit for the year, that you don't go through there and just use your equity. Now you go through there and take your profits before interest and tax, and then divide that by your capital employed, which is the equity plus the net